Welcome to another Snow Only podcast. Today, I'm delighted to be joined by Dylan Mitchell, the founder of Worldwide Property Finance. Dylan and I have been chasing each other for a while to get this done. I think it's an incredibly important message to get across in regards to the financing of properties in the French Alps. I'm Mark Light from SnowOnly. We sell a lot of ski properties, and Dylan's knowledge on French mortgages for non-residents is unparalleled. So welcome, Dylan, to the SnowOnly podcast. If you could just give us a little bit of a background on yourself and how you found yourself in a position to advise on French mortgages.
Sure. First, thanks for inviting me on. This is great. Basically, how did I get started? By accident, to be honest. A friend and I, we went to Biarritz for a weekend in 2001, and we were just went for a weekend to get away, and we were walking down to the beach, which wasn't far from where we were staying, and we walked past this estate agent's office. Guy came flying out the door, and it's like, "Which one do you like?" I was like, that one looks really nice. And he said, "Well, it's like between here and the beach. You might as well have a look." And I'm like, "Whatever, okay." And then we sort of popped in and had a look on the way, and it was like about 100 meters from the beach. It was a beautiful little apartment. And on the way back from the beach, without too much thought, we bought it. And then we had to try to find a way to finance it. And at the time, we were both in St. James's Place. We were both financial advisors, and we thought, well, that'd be fairly simple. We both banked with Barclays Premier at the time, and they were, in those days, you had Barclays France. We phoned them up, and they said, "Yeah, no problem. We'll sort this out." About 3 months later, we had a phone call from Barclays to say, "We've no idea why, but we can't get your mortgage. Like, nobody can help us. Nobody's returning our calls. Nobody's doing anything." So okay, well, now we know. Now we've got to find a solution. So I just started phoning banks all over France, trying to find somebody who hopefully spoke English and hopefully could help me get a mortgage. All in all, about 9 months from when we actually bought the place, we had to complete it. And it was definitely a bit of a learning experience. Because I was in St. James's Place at the time, just people started knocking on the door and saying, "I understand you do French mortgages." It's like, well, that's not totally true, but yeah, I can see if I can help. And I just started doing like maybe 5 or 6 mortgages a year, but because of where I was working in London, they tended to all be sort of $1 million plus, which in 2001 was a lot now, but it was really a lot in those days. So I was able to sort of build up a good network of contacts within different banks in France. And then it kind of just grew from there, really. I set up a little office, employed a couple of people, and we just started, depending on demand, people would phone and say, "Can you help me buy a place in Spain or Portugal or the Caribbean or Dubai or wherever?" And in the end, we ended up covering 35 countries for mortgages, which was a lot, and it was a good experience. Like just thinking, okay, well, how do we get mortgages in the Netherlands? And phoning up and finding a way to find a solution. And then the recession came, and then so in 2009, I thought, well, yeah, that's a good time to sort of funnel things a bit better and just focus on the markets we want to work in. So that narrowed it down to sort of predominantly sort of France, Spain, and Portugal, and the Caribbean and Mauritius and so on. And then in 2009, I thought, well, we should maybe help people, to do other things, and we sort of built up a network of like reliable lawyers and accountants and surveyors, insurance brokers, and everything that you would need to be able to buy a property in another country, because it's not just the mortgage, and really you need a team of people around you to provide all these services. And it's kind of just grown from there. Eventually, I'd left St. James's Place in 2003 and set up my own financial services company. I sold that in 2012, and then sort of just focused really on international property and finance from since then. And but my finance background has been really invaluable, because often, would deal with sort of a high net worth clients, and it's great to be in a position where I understand exactly how they finance things. If they have businesses and they have different sort of structures, and how they've structured their business and how they're taking money in, putting money in, taking money out rather. And if they have offshore companies and offshore structures, and I used to be the person that set all those things up. So it's great to
Yeah.
be in a position where I can understand it and then explain it in a way that the banks can understand it as well.
Yeah, just to understand, Dylan, just to give some context to kind of people who are listening. Typically, who were you helping? Nationalities for non-residents? Was it typically UK buyers? Was it, or it was pretty much everywhere?
No, for a long time, it was really just UK buyers. As you know, these days we're in a position where we can help people from multiple countries to sort of buy
Yeah,
property. But for many years, it was really just UK buyers. That was our core, and we built up a pretty big network of professional introducers like financial services companies, accountants, and so on in the UK who would send us clients who are looking to buy property overseas, and so that's because of that. Like almost everybody was really from the UK.
yeah. I mean, we obviously, as a ski company, um, have find your service obviously invaluable in terms of obviously helping people to either get a mortgage or leverage for their properties. Is fundamentally important. Obviously, some people are cash buyers, but they don't want to use their cash, so it's obviously super important. And as you know, in the ski industry, there is a tendency for more high-end buyers in that process. Obviously, ski property is not necessarily cheap. So what we'll do is, I have a million questions, as you know, but let's see if we can kind of run through some at the beginning. Okay, so obviously this is dependent on loads of different nationalities buying, loads of different situations. You've got expats in Dubai, Singapore, Hong Kong. You've got UK residents. You've got lots of people around. But so, as a very kind of general question, how much can non-resident buyers borrow?
So that depends on where they're resident to a large degree. So if you're, for UK based buyers, Brexit has had an impact. Like we're still able to get finance for UK buyers, but we just have less banks.
Yeah,
So that has a bit of an impact on how we can structure and how we can borrow. But somebody who's based in the UK, the maximum you can borrow in France is 85%,
okay,
which is, I think, more than most people would think they would be able to borrow. So you put down a 15%
yeah,
deposit plus the notaire fees, and that's it. Everything else is covered. If you're from the US, then you're probably looking at a maximum of 75%. If you're living elsewhere in Europe, probably 85%. If you're an expat somewhere like Dubai, Hong Kong or Singapore, some of those places, then you're probably looking at a maximum of 80%.
yeah.
Those are pretty much the figures.
That's still a fair amount. I remember when we were looking at buying property when I was living in Phuket and Bali. Then it was 40% deposit, so up to 85% is pretty generous.
Yeah, and with really good rates as well. So it makes a lot of sense.
Dylan, I just kind of want to go back a little bit because we're kind of at the beginning of the podcast. You kind of specialize in this. There's not many companies that generally specialize or get access to the amount of banks that you have access to. I think it's an important kind of message to get across. Not everyone can do what you do. Is that right? Is that a correct statement?
Yeah, I think for a number of reasons. Partly over the years, we tended to deal with fairly high net worth clients, and high net worth clients tend to not necessarily have like run of the mill finances. So we could obviously, if somebody is employed and they have pay slips and they're borrowing well within their means, then we can obviously do those sort of mortgages. But if it's somebody looking to borrow a few million, they don't necessarily have pay slips that meet that criteria, and so but they might have a high net worth behind them, and so that then you've got to be a bit more creative and use the international banks to do that sort of financing. And so over the years, because we've dealt with mortgages ranging from I'd say 250 to 20 million, we've brought quite a wide network of banks that can cover the whole spectrum of whatever somebody's looking to borrow and whatever somebody's profile is. And so because of that, we have like a very wide network of banks for France, which includes French high street banks, French private banks, and the international private banks in Monaco, Switzerland, and Luxembourg. And so, yeah, the idea is that we can provide a solution for, if there is a solution, we have it basically.
Yeah.
So
it's always worth people checking in with you just to make sure if they get refused from somewhere else, it might be worth checking in with you because you can maybe access some of the banks that others can't without sounding like I'm saying it's some sort of title. But yeah.
And also, I mean, there are, as you know, there are one or two French banks that are only available through brokers.
We've discussed,
yeah. So and those are often the banks that actually, because they're specific French banks created for international buyers. Those are often the banks that will, offer you the best deal, maybe, but also sort of a better place to help finance a lot of the international buyers. And you just can't go direct; they are only through brokers, and not every broker. I think one of the best banks we work with in that category only works with 20 brokers in the whole world. And so we're one of those 20. They originally, it was only 10 when they launched, and we were one of the original 10. And apparently they're not looking to go any higher than 20. So we're definitely in the right place.
Perfect. So we discuss how much can non-resident buyers borrow. What's the generally the minimum mortgage amount? Because obviously we mentioned before that there's a lot of people looking at let's say a bolt hold in France, but small amounts. They don't really have the money to do it, and it's 50, 60,000 or something like that. What's the minimum mortgage that you kind of deal with?
So generally about 250,000 as a mortgage amount. So then, let's say you bought a place for 300,000, and we borrowed 85% of that. That's about 250. That's kind of usually the minimum that we can help with.
Yeah, and is that the minimum rate that you deal with, or it's generally the minimum rate that the banks kind of want to deal with?
It depends. It depends on which part of France. So in the UK, you've got banks that will cover the whole country, and that's normal. In France, you have different banks that will cover different parts of France. And so if it was the Alps, generally 250 is the minimum. If you're buying in the Riviera, there are banks that might even do maybe 100,000. But as a business, we tend to sort of say our minimum is about 250.
And then up to whatever.
There's no cap. Yeah, I mean, we if it's 20 million, 30 million, or 40 million, it's not really an issue. But if somebody did come to us and say, look, I'm buying a property for 200,000, we wouldn't be able to do it, but we'd just say, look, go to this bank, and this bank, and we'll probably find a little bit of help you.
You can at least advise.
We're not. If we can find a way to help anyone, we will.
So if we take a typical buyer that's bought somewhere in the French Alps, let's say the plan, and they're looking at 500,000, and they contact you, and everything's good in terms of kind of your criteria. What documents will be needed for a typical buyer to process the mortgage?
So basically, obviously, usual proof of ID, proof of address. So we need your passports, and when you provide a passport, it needs to be the full page of the passports, including all the numbers and chevrons along the bottom of the page. And then proof of ID, which it could be a utility bill typically. Then you got 3 months bank statements. If you're employed, 3 months pay slips and probably a P60. If you're self-employed, and in France, if you own your own limited company, you're classified as self-employed. In that case, they'll look for 3 years income, so 3 years tax returns, and generally they'll take an average of the last 3 years income. So it's quite important to sort of have those three figures clear. And then, different banks will work in different ways with different types of income. So let's say, we've had clients who maybe, they receive a large bonus every year. And so they're very much, if they're working in the city, for example, they have like a salary, but they're really working for their bonus. So their bonus could be a multiple of the salary. Some banks will take an average of 3 years bonus. Some banks will only take 20% of bonus. And this is one of the reasons, and there's lots of criteria like that, which will vary enormously from one bank to another, which again is why it's important to have access to quite a big range of banks, so that, depending on your circumstances, we can find somewhere that suits you the best, that you fit the banks.
Yeah. How long does the kind of process take? I mean, obviously, how long is a piece of string? But like typically, on your average length, how long, if you're approved and all the documents were accessible, how long does it generally take?
So again, that varies a lot from bank to bank. Some banks are much quicker than others. But I would say generally, sort of, the minimum is probably about a month. The maximum could be 12 weeks, let's say. And it's important to sort of have that discussion up front before you sign a purchase agreement, because in the purchase agreement there will be deadlines for getting the mortgage approved. So you need to have that conversation with the notaire and say, fine, well, I've got 2 months. This bank I'm going to should be done in 1 month, so that's fine. Or I've got 2 months, but that bank I really want to go to requires 12 weeks. So I need 12 weeks, not 2 months.
Yeah, I'm going to throw in a bit of a question here, Dylan. It always happens. On a typical purchase, whether that's an off-plan purchase where you have stage payments, or you're kind of buying into a resale, at which point do you insert yourself, and how do you insert yourself in that process? So I've been speaking to a lot of agents recently, and myself, I've been an agent for 20 years, about just having that seamless process along for the buyer and the seller, just so there's no bumps along the road. What's the best point for you to insert yourself when it comes to mortgages, so we do have a seamless process and there isn't a lot of gaps and waiting time and all that kind of stuff?
As soon as possible. And ideally, before you find the property, or at least, you found the property, and then we can kind of get started before you sign the purchase agreement.
Before you sign the purchase agreement?
Yeah. So for a number of reasons. One is within the purchase agreement, you should include the details of the exact mortgage you're applying for.
Yeah.
And so basically, because often what will happen is people will meet an agent, they sign the purchase agreement, and they tick a box to say, I'm buying with a mortgage. But that's it. They leave the rest of the section blank. Now, a mortgage could be 10,000 euros. It could be anything. Like, you haven't stipulated anything. Whereas with us, we always make sure that you stipulate the name of the bank, the interest rate, the amount you want to borrow, and the term. So now, if you don't get that precise details or something better, then you can actually walk away from the purchase, because you've actually stipulated making an offer subject to these criteria. And so, as an example, we had a situation a couple of years ago when interest rates suddenly went up very, very quickly. I'm sure everybody remembers that. So we had a client who wrote into the purchase agreement that she was going to get a rate of, I don't know, like just over 2%. And then actually the rate was closer to 3%. And because of that, she was able to recover her deposit, because she stipulated the interest rate that she was prepared to buy with. And then she was able to withdraw from the purchase because the rate offered wasn't the same rate.
Okay, so it's important to put that into the purchase agreement. Obviously, then if things change, then you have access out.
Exactly. Yeah, it just gives you a lot more protection, and so you need to know that information before you sign the purchase agreement.
Yeah.
And the other thing is just timing. So like you said, typically you're given 60 days or 2 months to basically get a mortgage. If we can get a head start on that process, then great. Everybody can relax and we can just be done quite quickly. And
Yeah.
so we don't need the signed purchase agreement to submit the mortgage application. If we can, even just a rough draft of the agreement is enough. That's all we need. And we can submit the application, the bank can go through the whole underwriting process, even value the property. And so, this year we've had quite a few cases where people have had their mortgage offer within a week or two of signing the purchase agreement. Like the mortgage offer
Okay.
is done. And we've got a client. I mean, today is the 1st of October. We've got clients completing in 3 weeks' time, but they signed their mortgage offer 5 weeks ago. And that's great. So then everybody can relax, and but that was because we started that whole process, before they signed the purchase agreement. We got going, we got it done quick.
But I think it's I think it's right what you say, because we've been speaking a lot about this recently, and from my experience, it doesn't always go smoothly, especially where the places that I used to work. And I think having these mortgage things in place, we've also been speaking with other companies about currency and kind of forward contracts, agents, good developers. It can be a seamless process. But as long as you kind of get all your ducks in order, so there's no kind of bumps along the road at the other end.
Yeah, no, exactly. And I think often people don't understand the buying process. They think that it should be very similar to the UK, and I remember doing the same thing. But it's very, very different in France to the UK or the US or most other countries. In a lot of ways it's more thought out and better, but you do have these deadlines, and you can lose your deposit if you miss these deadlines. So
is there any, Dylan? Again, we will work through the questions. I keep on getting new ones coming up. What are the reasons that people would be refused the mortgage? I imagine there's a multitude of reasons, but typically, generally, what would they refuse? A reason?
As you say, there's probably thousands of reasons. I mean, it could be lots of things. I mean, for example, if you're these days we try to think of everything up front, and we ask as many questions as we can, try to uncover any potential issues. But I mean, just kind of thinking, like, for example, say you're on probation, you've changed jobs, you've got a 6-month probation. To you, you're employed and it's not a problem, but to a bank, they won't take an application for somebody that's on a probationary period at work.
Yeah. Okay. Yeah.
Something little like that could easily be overlooked. Or
is it harder? Is it harder to get a mortgage, as we spoke about, either self-employed or through a company, than employment?
Yeah, I mean, you say through a company, you mean through a French company, or
No. If you like I have my own company. My own company's in Hong Kong. Would it be harder than that then through just normal employment in the UK if you're working for Deutsche Bank, for example?
Yeah. I think the world over, if you're employed, it's easier for you to get a mortgage. If you're self-employed and you own your own limited company, then you're treated as self-employed in France. And so, yeah, both cases, it's definitely more complicated because you need accounts, and depending on the business you have, maybe you need the accounts for your business for the last 3 years as well.
Yeah.
It can get fairly complicated, and and depends how you structured your business. We've had clients who put their business into a trust, and and then you've got to be able to understand how that's all works and the reason behind it, and tax consequences, and there's lots of every client's different.
Yeah, understood. So back onto the questions. Is there any kind of additional fees that are involved, hidden fees or anything like that kind of people should be aware of?
I don't think there's anything hidden. I mean, we obviously declare our fees. We make sure you understand what the bank fees are. So yeah, I don't think there's anything hidden. It should all be quite transparent. But I mean, the fees you should be aware of. In the mortgage side of things, is the banks would typically charge you an arrangement fee. Normally in France, that's 1% of the mortgage amount. Generally, we're coming through us. We have relationships with the banks where we're able to get that reduced, sometimes quite significantly. Then you might, some banks will require you to pay for the survey. The survey is probably 2,000 to 3,000, depending on the property. It could be a bit more, maybe. Other than that, that's pretty much it for the bank. Obviously, like most French banks require life insurance.
Okay.
So, then you have to apply for life insurance if you like an extra cost. And so we, on that side, we work with a really good firm of independent French insurance brokers. You don't have to take whatever policies offered by the bank. You go to the whole market to get the best terms on that as well. In terms of our fees, we charge an admin fee of £350. And the way we work is we try to get everything done as far down the road as we can before we get to the point where we ask for anything. So should I just run through our process very quickly?
Only if you want to. That's entirely up to you.
So basically, we start with like an initial phone call, which is usually sort of, say, 25, 30 minutes. And with through we can kind of answer any questions, explain the whole process, things you should be aware of, potentially like wealth tax and things like that, how mortgages work. Then after that, we then send a web-based mortgage inquiry form, so people can fill it out on their phone or whatever, don't have to print it. That shouldn't take too long. Click submit, that comes back to us. We then come back to you with a range of different options from across the market. And the reason we do that is, like, every bank in France is different. They all have different products. You can't just look at the rate. You've got to look at a range of products that would suit your needs and then find the one that suits you the best. Whereas, in the UK, you can go to any bank in the UK and the mortgages are the same. All you're looking at is, like, what's the best rate for me? Whereas in France, you've got to look at all the different products to find the best product for you, and then also look at the rate. So that's why we give you a range of options. We then have a follow-up phone call to have that discussion about what suits you the best. And then from there, we've narrowed it down to the product, obviously the bank as well. And if possible, we'll try and negotiate a bit further on the charges and the rates and everything on that product. And then at that point, we then generally will ask you for proof of ID and, if possible, a copy of the purchase agreement. We'll submit a provisional application to that bank to try to get as far as possible like an approval in principle. And if there are any issues, then hopefully those are highlighted at that point. And once we've got the green light essentially from the bank, at that point, we then ask you to sign our client agreement and pay an admin fee of £350. So we do quite a lot of work before we ask for any commitment from a client.
Yeah.
And so, but on the back end, that saves us enormous amount of time because the bank has already, got details of the application where we submit everything. And so usually the application can progress very quickly from that point. And then when you complete, then we charge a broker fee of 1% of the mortgage amount. But like I said, usually we've got quite a lot of savings on the bank's fees. If we can save money on the interest rate as well, which is not uncommon, then those are filtered through over many years. But ultimately, we try to be a value-add service, and then you have our network of really good team around us as well.
Yeah, just something you said earlier that I just kind of want to go back to in terms of the life insurance. How many banks require that as compulsory?
So if you're looking at French banks, all of them except for one.
Wow. Okay, so it's a necessity if you're going to get a French mortgage that you need life insurance that probably people don't know.
Yeah, definitely, yeah. So when there's only one French bank that won't require it, and then the international banks in Monaco, Switzerland, Luxembourg, they don't require it.
Wow. Okay. just what is moving on? What is a typical term length of the mortgage that you're applying for? And in any case, is it possible to make early payments to that mortgage to reduce it during the mortgage term?
Sure. So again, every bank is a bit different. So some banks would do 20 years, and some banks would do 25 years.
Okay.
And for French banks, by and large, they all offer fixed rate mortgages. So, the rate you get now is fixed for the term. So it's not like in the UK where you have to think about refinancing every 2, 3, or 5 years. You get, if you have a 25-year mortgage, you have a 25-year fixed rate. So you're just locked in, nothing will change, and which is great. Actually, it works really well. But if you did want to pay the mortgage off early, or you did want to reduce the mortgage, then there would be redemption penalties for that. Redemption penalties, it doesn't matter which bank this is. If it's a fixed rate, the redemption penalty is half the rate, or 6 months interest, the same thing. So if your interest rate is, say, 5%, then your redemption penalty would be 2.5% of whatever amount you want to overpay into the mortgage.
So almost like an additional 2.5%, which is the fee.
Exactly. Yeah. So you would pay an extra 6 months interest if you wanted. So let's say you borrowed $1 million and you thought, I want to reduce it by 100,000, then they would charge you 2,500 penalty on that extra 100,000 that you want to put in. But after 6 months, that would equal out. I guess you could look at it that way. If possible, if it's something in advance, like I'm definitely, I don't know, maybe I'm getting an inheritance, or I'm selling a business, or I get bonuses every year. Then we could always try to negotiate with the bank so that maybe after a few years there are no more redemption penalties. So that's always something we can have a look at, and some banks are open to that.
Yeah. Wow. So next question. Can I finance a renovation? Obviously, a lot of people don't always want to do the traditional buying a brand new property. Some people like to move into a brand new property that needs no work. But some people, the crazy people amongst us, like to buy something that's like an old barn conversion. Can you mortgage a renovation?
Yes. Yeah. So you can actually finance the purchase of the property and the works all at the same time. Or alternatively, even if you're going to buy some land and build your own property, you can finance the purchase of the land and the build of the property. So the only thing on that, like over the years, we have had people try to do this themselves. They're like, well, I'm going to do this build, and they try to coordinate like all the local builders and the local plumbers and the local electricians and the mayor and the planning, and it's just a nightmare. So a lot of banks these days, I think, shy away from that for good reason. It is a nightmare. It's far better if you find like a professional firm that would provide everything. So maybe an architect and a builder that work closely together. They design the house. They provide like a document that includes breakdown of the whole project and all the costings. And the bank is really just dealing with one organization. They pay everybody. That works well. That's definitely possible.
But so essentially, it's possible. So on the flip side, what about an off-plan property? I know we kind of. I'd like you to kind of just to mention to the people that are listening about the leaseback as well. But what about financing an off-plan property?
So basically with off-plan, like France, like in terms of off-plans, I think they've got the best structure in the world. Really, it works really, really well. So if you look at it from a developer's point of view first, what he would do is he'll secure a site, he'll design what he's going to build, get planning permission for all that. He will then start pre-selling units within that development, whether it's chalets or villas or apartments, whatever he's building. He will start pre-selling those units. Now those sales don't complete. You're just doing reservations, and so you'll pay a reservation deposit, typically of 5%. That money is held by the notaire within the notaire's bank, and the notaire's bank is a division of the Bank of France. So it's like having your money in the bank. And so you sit in that situation until the developer has pre-sold 50% of the value of that development. not 50% of the units, 50% of the value of the entire value. He or she then goes to his finance bank with the proof of the reservation agreements that have all been signed and says, fine, I've pre-sold half the value of the development. The bank will then give him or her a bank guarantee. That means that if that developer falls into some financial difficulty or some reason or dies or who knows what, if there's an issue, then the bank has to step in and ensure that that development is delivered. So it's very, very secure. Once the developer has that bank guarantee, which is called a GFA, then the notaire can then start processing those purchases and start completing on those sales. And so because you've got this structure in place, then the French banks are willing to lend to people buying off plan. So I think a lot of countries, banks have problems with this because there's no underlying security for a developer. So I think even in the UK, it's very difficult to finance off-plan properties. But in France, it happens every day because of the structure, which works incredibly well. And so, so we can, like I said, we can get up to 85% mortgages for off-plan properties. And the way it works in terms of the mortgage is typically when you actually complete on the purchase, the property is not built, you've completed on the purchase. You'll pay first stage payment is 25% normally. So you've already paid 5% reservation deposit. You now pay additional 20%. And then as the development goes through its different stages, then you'll be invoiced for different stage payments. So once the foundations are completed, it's usually another 20%. And the walls go up, maybe a 15 or 20%. But if let's say you've financed 85%. So now on signature at the beginning of the process, you're required to pay 25. So you pay your 15 and the bank will draw down the additional 10. So now 25% is your 15 and the bank's 10. Now you only pay interest on the money drawn down from the mortgage. You don't pay interest on the whole mortgage, only the amount that you need to pay. And then so when you get the invoice for the foundations, like that's a 20% invoice, you forward that onto the bank pays that invoice, and you've just drawn down an additional 20%. And you just go through that process. And normally, normally it's structured as interest only during the build phase. So, especially in the early stages, the interest payments are relatively small. And like I said, the whole system works really well. And then when you complete on when you get the keys to the property, then the mortgage will convert to capital repayment because most banks in France only do capital repayment, not interest only. And then you just carry on as normal.
So that's really interesting. It's so nice when you kind of like spell that out for people. I'm not too sure everyone realizes how that exactly works. So is that how the banks works in terms of interest only through the repayment, through the development process, and then at the point that the development finishes, then it gets capital repayments?
Yeah, exactly. Yeah,
that converts on the day that whatever they say, we're now finished the development.
Yeah, and the bank will then write to you and say, you've drawn down all the money, the development's been delivered, and so from now on, your monthly payments will be this, and you start capital payments over the next 20 years or whatever it is.
What's the typical difference between the interest payments and capital and interest payments?
Well, it depends on the term.
It's
I don't know. I can't give you an exact figure as a percentage how much more it is, but it depends on the term.
So then, obviously, once if you put a good scenario would be if you work with an established developer that has, let's say, a good track record of rentals from other developments, as that kicks in for the capital and interest repayments, the rental starts coming in to offset your mortgage repayments, and then you use it whenever you feel like.
Exactly. And so that say the whole system just works incredibly well.
Yeah.
And so that's
can we just touch on leaseback, because as we know, in France there is a lot of leaseback developments purely for the fact that to cover the amount of beds in resorts, essentially. So we don't have ski resorts where no one wants to use their property and no one wants to rent it out. So basically you get these ghost towns with a lot of investment. So obviously that's how the leaseback idea was created, and not to get kind of too involved in the leaseback structure because we've done it on other podcasts. But what's the relationship with mortgages and leaseback properties?
So actually, should I just very quickly give a bit of recap on leasebacks, because then it helps to understand.
Yeah, of course.
So basically, leasebacks, the concept of leasebacks you see like all over the world these days, but I'm pretty sure it was created in France. In 1967, there was the first leaseback was in Avoriaz with Pierre Vacances. And they basically, France had a problem because it was the #1 tourist destination in the world and had no hotels. So people would turn up in these beautiful villages. There's nowhere to stay, which is the point. So the government created this tax incentive to encourage people to invest into these hotels, and the whole point was, essentially, you buy the hotel room, you then lease it back to the hotel. They pay you a guaranteed rental income, and everything works well, and you can go and stay there for 1-2 weeks a year or whatever you negotiate in that lease agreement. And so these worked pretty well to a degree over many years. There was there was one main problem. One was the guaranteed rental income. Basically, it was never really guaranteed, because it was like, it's only guaranteed if the hotel can pay it. And so the issue people ran into was, firstly, in a big way, was in the recession in 08, 09. People stopped going on holiday. People would just tighten their belt and didn't go on holiday for a couple of years. And so you had these hotels, especially the ones that weren't in prime locations, suddenly didn't have that many guests and couldn't meet their liabilities to the owners. And then so suddenly people had these properties where they thought they could depend on this income. Then the income wasn't there for a couple of years, and so people struggled. And the banks ended up, I think, having to repossess a lot of properties. And so since then, especially for international buyers, most French banks don't want to lend on lease banks for international buyers. And so if you're based in the UK or US and you're looking at a property for, say, 300,000 euros in the Alps, and it's a leaseback, where they're kind of saying, look, you've got you can use it 3 weeks. You lend it to us, we pay you this rent. It doesn't really matter who the management company is or how great the property is. Most banks that lend to non-resident buyers aren't interested. There are exceptions to that, definitely. I think there's banks like CIC and Banque Populaire, possibly in the Alps, that might lend on those properties. But we find that they can do something today and they can't do it tomorrow. And so it's just not something that we can depend on. If we kind of say we're going to help you, then we need to believe we can help you. And so working with those banks on those type of properties is a risk, basically. So, I would be very careful. The other option is the more modern version of this, which is para-hôtelier. So Airbnb essentially changed the way people think about going on holiday. It always, 10, 15 years ago, if you're on holiday, you thought about booking a hotel. Airbnb changed that. So especially places like the Alps, people often think about, well, let's book a chalet, let's book an apartment. And so with the French government, it's very important to them that people want to go skiing and staying in the French Alps, not the Italian Alps or the Swiss Alps. And so they need to make sure that the type of properties that people want to stay in are available. So what they did was, about 10 years ago, is they duplicated the tax incentives that were available for leasebacks and put those on residential property. So leasebacks are essentially commercial properties. You're buying a hotel room and you're leasing it to a hotel company. You have a commercial lease. And so whereas residential property, it's just like Airbnb, it's your property. You can rent it, not rent it. You can do what you want with it. But if you decide that you want to rent it out on a Airbnb sort of structure, where it's a weekly let, and you're happy to sort of rent it for a reasonable period of time, every year like that, then the French government will offer you the tax incentives. The tax incentives basically are, when you buy a new build property in France, the price includes 20% VAT. But if you commit to sort of renting the property out for a few weeks every year, and then basically the French government will refund that VAT that you paid back to you as a lump sum,
Yeah.
which essentially
Yeah.
works as a reimbursement of the deposit you put down to buy the property. And in addition to that, there's no income tax on the rental income for up to 30 years. And so that calculation is done essentially as you can offset, I think it's 80% of the purchase price as depreciation, and you can use that against the rental income over 30 years. You have other costs as well, like the mortgage interest, and all the bills you're paying, like maybe council tax and things like that, help you basically go for many, many, many years without having to pay any income tax in France. And so that's very attractive, and that's, I think, one of the reasons that really supports the French property market. Is people always, that just love the structure. They can put down a deposit, buy the property, they get a big chunk of the deposit back, and then there's no income tax on the rent, which really makes a difference to the cash flow long term. At the same time, your mortgage is maybe locked in on a fixed rate for 25 years as well. And capital gains tax in France tapers down. So, after 22 years, there's no capital gains tax either. So, in a long-term investment, the whole thing works really, really well. And it's one of the reasons that French property is such a stable long-term investment. If interest rates shoot up, or everyone's got a mortgage isn't affected because you're on a 25-year fixed rate. The longer you hold it, the better. So it encourages long-term ownership. It's a great market, basically.
Yeah. So just kind of while we're on that, what are we talked about the fixed interest rate, obviously for 25 years. What are the typical interest rates at the moment?
So it depends on how much you're looking to borrow as well, and the banks. But generally, I would say you're looking sort of say between 4.1 and 4.5, something like that right now.
Okay.
Fixed for say 20, 25 years.
After the last, say, 2 years, there was a bit of a problems in terms of mortgages. I say problems, but it seemed like it was quite difficult to get a mortgage as a non-resident. Has that kind of eased over the last 2 years? Is it a bit simpler today?
Yeah, definitely. I think a couple of years ago there was a gap in the market where there was just no lenders basically below $1 million that would lend to UK residents buying in the Alps. You can go to like the local branches of the banks in the Alps, but they're very difficult. And if it's ski season, they could be too busy. If it's the summer, they're not. They're just they're not there. So very, very hit and miss, and very difficult. But since then, the banks that we knew were going to be launched have launched, and specifically banks that are broker-only banks, by the way, and they very, very well have filled that gap in the market. So I don't think there's really an issue to get a mortgage in the Alps.
So we're in a good place at the moment.
Yeah, absolutely. It's all about having the liquidity in the market, and so from that, say, 250,000 euros and upwards, then there's really, really good solutions in the market.
Good. Just quickly, what nationalities that can easy borrow from French banks at the moment? We've got a UK, EU, US, and which countries can buyers be resident in? I know we kind of touched on this before. If you could just kind of explain.
Yeah, I mean, basically, the ones we know we can finance are going to be expats living over in the UAE, like Dubai, Hong Kong, and Singapore. And but if anyone's living somewhere else, then they can always try us, and we can always approach the bank to see if that's possible. We know there's a few really good solutions for expats living in those places. And as you say, like clients living in the US, Americans actually buy quite a lot of property in France. So yeah, there's a really good market for that, and we have
Yeah, we have a lot of Americans coming to look at our site at the moment. I think it's the second popular viewings on our site is from America, and a lot of inquiries.
yeah. I mean, because the dollar's very strong, and and there's So I think definitely sort of Paris has always attracted a lot of Americans. It's, the fashion industry is connected to Paris, New York, and a lot of US banks. But I think generally, a lot of Americans like to get property in Paris. But I think there's good opportunities for them to also look at buying ski properties. If you're in New York and you want to own a ski property, it's worth having a look at the Alps as well as the Rockies.
Yeah. So we touched on loan to value, which we kind of covered. Next question: why get a French mortgage instead of a UK mortgage or paying in cash?
Okay. So the first thing is probably the French wealth tax. So in France, you have wealth tax, and it's levied on the equity you have in your property or properties if you have more than one. And so yeah, basically there is a threshold. So you've got to have more than 1.3 million euros in equity to fall into the wealth tax bracket. But then if you have more than 1.3 million, you pay wealth tax and everything above 800,000. So it's like a bit of a drop. So that's something to be aware of. Obviously, if you have a mortgage, you have less equity. So mortgage can, in that sense, can be sort of tax planning in a way. And we do see a lot of clients take out mortgages specifically, as part of their wealth tax plan. It's common. The other thing, I guess, is um, if interest rates were like 10, 12%, then you could argue, well, I'm better off sort of paying cash instead of borrowing the money. But if interest rates are like 4%, well, you know, if you're able to invest your money, you'd probably find a better return than 4%. So it depends on clients' approach to risk and what they want to do with their money. But if they want to invest the money elsewhere, then it makes sense to get a mortgage against their holiday home and use the
Yeah,
capital to set up businesses
yeah,
or invest stock market or something
yeah,
else. And in terms of actually just borrowing money in different currency, like say they take out a loan in the UK in sterling to sort of buy property in France long term. Then now the obvious thing is obviously you've got a debt in sterling or dollars or something, and you've got a property in euros that they probably won't go too out of whack. But like right now, the pound has gone to like 120, I think, and it wasn't that long ago. It was like 112, 113. So there's a bit of a difference. See that more with other currencies. I remember years ago there was a big change. There was the African rand and the dollars and Swiss francs, and that caused a lot of people some problems. But yeah, generally, I think it makes more sense to keep the debt in the same currency as the asset from a currency risk point
yeah,
of view.
yeah, yeah.
And the other is it's very difficult to do equity release in France. Some people might think, well, I'll borrow the money, buy the place in France, and then I'll refinance it later on. You can't. And with the French banks don't do equity release. There is a caveat to that, which I can talk to you in a minute, called post finance. But if it's a pure interest equity release, the French banks won't do that. If your property is worth, say, 2 million, 2.5 million, and more, then the international private banks can do equity release. But if you're buying something for less than that, then you're in the domain of the French banks, and they won't do equity release.
Yeah. Understood. But obviously, the long term fixed rate is such a good thing, and obviously, as you said, in terms of doing the UK variable to every 2-3 years, which obviously people have come unstuck with recently. It's pretty crazy. So your advice would obviously, if you're buying a French property, would be, if you can, get a French mortgage.
Yeah, I think it definitely makes sense, and especially if you rent the property out and you've got euro income paying a euro mortgage on a euro asset. I think it
Yeah.
makes a lot more sense.
Yeah. So just to cover the last bit, the types of mortgages there are of obviously capital repayment, interest only, refinance, post finance, and equity release. Any others?
No, I think that's pretty much it. I think everything will come into those categories.
When just to cover, just if you're just so I understand, which is a lot of what people in the UK do here, they have an interest only mortgage, obviously. So then when they rent, the rent is more than the interest only mortgage, and then they're paying it back. And then obviously when they go to sell it, they can pay back obviously the capital. In France, do they allow that? Can you do an interest only mortgage on a property? Because we talked about it for off plan, but just for a normal property, you can do an interest only mortgage.
So to a degree. So like there's a couple of banks that will offer the option of like, you could take a 15, 20-year mortgage where the first 5 years or 7 years can be interest only, and then it will just convert to capital payment for the remaining term. So you have products like that, which can suit some people. You also have banks where you place quite a large amount of money on deposit with the bank, and in return they'll give you an interest-only mortgage. Generally, though, when you compare these products to, like, say, a 20 or a 25-year capital repayment mortgage, you're actually paying less or the same with a capital repayment than you are with interest-only. So it makes more sense then to just go with the capital repayment, which is probably on a lower rate because it's capital repayment, and it's just simpler, and you're paying the mortgage off. I can't remember the last time we did an interest-only mortgage with a French bank. If it's with an international private bank like Monaco, Switzerland, Luxembourg, they can do capital repayments, mortgages as well, like 15, 20-year terms. But generally, they're interest-only mortgages that people got. But then you're looking at properties certainly 2 million and upwards to be in that market.
Yeah. Dylan, I think we've pretty much covered everything that we have on the list that we were trying to cover today. Is there any kind of nuggets or golden bits of information that you would advise people that are considering a mortgage, other than to obviously talk to you, but anything to help get people prepared?
Yeah, I suppose. Yeah, I think the most important thing is contact us as soon as possible in the process, because if you start to run out of time, it can be really stressful. And so I think just being ahead of the curve is the best thing for everybody. Like, if we can it's such a pleasure when a couple of weeks after signing the purchase agreement, you've got your mortgage offer, and everybody can just relax, and it's just a case of waiting. It's a far better way to do it than contact us and say, I've got like a month left, can you help me?
I think that for me, it's all about trying to find solutions for a seamless process in terms of purchasing a property, especially a ski property. It's supposed to be kind of like a labour of love and an enjoyment, and not a stressful situation. It's generally a second home for people, or third if they're lucky enough. But there are resources out there to make it a process that's not a bumpy ride. It is a smooth process in terms of speaking to Dylan from Worldwide Property Finance, or some sort of fixed currency, or good agents, good developers, that makes buying something like a ski property a thoroughly enjoyable experience. So when you come to do it, you don't get a little bit angry of the situation, because sometimes it can spiral out of control if you're not organized. So my advice to anyone that's listening: speak to Dylan as soon as you can, in any of your situations, just so you have the right tools at the right time to be able to move forward. We'll put links in the bottom of this. This will be on YouTube, so we'll put links in the bottom to Dylan's page, and you can contact him through that page. And as Dylan kind of rightly points out, do it at the beginning of the process, not when it's too late and it all gets a little bit messy. Dylan, any kind of final words?
No, it's been a pleasure to do this. I've never done a podcast before, so thank you very much for the invitation.
No, but I think it's a pleasure having you on. I think it's a really important message that it needs to kind of get out there. And I think that whilst we've covered a lot of scenarios here, I think everybody's situation is unique. And I think the important thing is with these situations is you have to speak to Dylan in order to explain your circumstance, and then he can kind of marry you up with the bank that best suits your needs. We can't go through everybody's situation today and find solutions, but they're talking to Dylan over the past couple of years, there generally is a solution for most people. It's just about finding that pairing and which bank suits your needs, and obviously depending on the development that you're buying. So all the details will be at the bottom of the YouTube. Thank you very much for listening. If you do have any questions, fire them over to Dylan and he will no doubt be able to help. But Dylan, thank you very much for your insight into your expertise into property finance in France. I really appreciate your time.
That was a pleasure. Thank you.